Hey, this is Danielle, and today I'm going to be going over a Tesla butterfly. Well, actually, two Tesla butterflies that I put on yesterday, just directly before the earnings report, and I'm going to show you how I'm managing those. So, yesterday, before Tesla was reporting earnings, I was going over the chart and I said, it's gapped down 3 quarters in a row. So the obvious answer here would be to short it, right? But I'm a big fan of Tesla, and I also kind of felt like it had sold off so much going into the report that I thought there was a chance that there would be better than expected news and it could rally. Now, I couldn't decide which way to trade it because, when you have conflicting analysis and you feel like, well, the obvious way is down, generally the obvious way in trading doesn't usually work. So that's why I wanted to put on a contrarian play as well. So, in this example, what I ended up doing is I ended up trading it both ways. Now, when you do that, you are going to cut into your profits a little bit because there's one direction that's not going to work. But the put side and the bearish side here work perfectly, and the other one is just offsetting it. So let me go ahead and show you what I did. Now, when I was setting up the call side, Tesla was trading right around here yesterday, and I was looking at a possibility of it rallying up into resistance, which would have been around 220, between 220 and 230. The idea behind that would have been, if earnings weren't as bad as feared, and we ended up seeing some buyers come in, picking up this thing after it had slid so far, that's where it could trade to. To the downside, I was looking at a move into 185. The idea behind that was just that the market maker move was about $14, $15. That was the expected move over earnings. So therefore, if it broke through this key psychological value right here at 200, and then if it also broke through this recent low, and if it fell a little bit more than what the expected move was, you could see a trade down into 185. So my downside bearish target was 185, and my upside bullish target was 230. Now, clearly you can say, well, if you just would have picked a side, you know, then you would have been making a lot more money if you just would have shorted it instead of gone long and shorted it. Yes, that's absolutely true. But sometimes with earnings, I just like to trade it both ways. Normally, if I'm going to trade it both ways, I'll put a neutral iron condor, but in this case, I did a directional fly. So this is the bearish trade that I put on Tesla yesterday. This is a butterfly. It's a 200, 185, 170 put fly. I got into this trade for $2.32, and it's currently trading for around $6. So that's going to be about 250% or so of a gainer. Now, I set up this butterfly and I set it up in the option series for next week. This is because that is going to be the option series. It's not going to have as much volatility crush, and when you're buying a long strategy, it's not it doesn't work in your benefit if you buy long calls or long puts um, in the same option series as the earnings report is occurring, because that one is going to have more volatility crush. So I tested this one out by buying it next week instead. Now, you could also say, well, but Danielle, because there's still so much time on the trade, there's 8 days of time, you know, that means that it's not up as much as it could have been if there were less days. That is true as well. That's always something that I'm juggling with whenever I'm trying to decide which series to purchase in the options market. If you buy options and they only have 2 more days to life, and they go directly to your target, which in this case, the stock did go directly to my target. It's trading at 188. My target was 185, so it's pretty close. Um, if you had options that were expiring in 2 days instead of the ticker, or instead of the contract trading for around $6, it would probably be trading closer to 12, just because this is a $15 wide butterfly. And when the ticker is trading right at that center strike, that's where you're going to get close to max profit. In this trade, the max profit would be $15. Well, the max you could close it for, it would depend on how much you paid for it. That would be the max profit. But the max you could close it for would be $15 because that is the width of the spread from here to here. But the reason why I went out a little bit further is because it gives you more time when you have options trades that, let's say this didn't go in my favor, then it would give me another 8 days so that it would have time to come down into my target zone. When you place an options trade and you only have 3 days or less, you basically better be right immediately. And if you're not, then that's where things can go the wrong direction. So this one's up 250%. It's pretty good. I'm going to go ahead and take this one off, but I'm going to go ahead and show you the other one that I did as well. So you can see that I'm only making $336. You might say, oh man, well, that's a bummer because your trade was up like $750. Well, the reason for that is because I had a bullish trade too. So I had a bullish trade because I couldn't decide which direction to place this thing. So I basically wanted to trade it both ways. Um, trade it both ways in case it went outside of the range in either direction. So this was a bullish trade. It was a 215, 230, 245 call fly. Now you can see in this example that the trade price was 232 and it's going for 22 bucks. So this one was pretty much a max loss overnight. I knew that was what the scenario was going to be doing this whenever you're making a bet to an extreme upside and to an extreme downside. There's no way they can both work. The only way that this would work is if there's a lot of buyers came into Tesla and this thing ripped higher going into next week. There is still 8 days left, so anything could happen. The expected move into next week is $12, so it's very, very unlikely that this one actually comes through because you would need to see Tesla up at least 217 for it to break even. I was looking at the possibility of buyers coming into Tesla after this earnings report because it's down another 20 bucks. But I think that now that it's broken through the $200 price point and it's also broken through 195, which was a recent low, the problem here is that there's just no more support. I mean, there's there's just really not any, and I wish I could give you a better level, but the only support I see is going to be between 150 and 170. I know that's a huge range. I know that's not very helpful. But the thing is that's really the only trade that we have is between this range right here. So 150 to 175. The problem is with the ticker, when you've broken down below so many critical support zones, it just it it just starts to really struggle because there's just nothing left that you can use to hold it up. This is a Fibonacci support zone. That one just broke just recently as well. Let's try this one. It's a little bit lower, 180. But whenever you can see me, struggling to try to find a support zone, that means there's not a good support zone. So when there's not a good support zone, what that means is that there's a lot more room for it to fall because it's already broken through the majority of the support levels that it has. So getting back to this Tesla trade, what can I do with it? The call fly just needs to stay there. The put fly, I could leave it on a little bit longer. It's climbed up a little bit into 189. The best place to take it off is when it's around 185. But the thing is that if it does end up holding here, which right now it's somewhat stable, market just opened 22 minutes ago. What you don't want to see happen is you don't want to see, suddenly buyers coming in and having it rip higher because that is where you're going to start losing the profits on the put side. That's not what you want to see because what happens is your call side already lost money. So you need to take the profits on this side to make up for the part that you lost here and just to lock in your gains. So this trade is 250%, but you do have to account for the one that didn't work in the overall level. 340 bucks, not great. I mean, it could be worse. It's not bad either. Of course, I would have preferred to have only done one side, but couldn't decide which side to do. So that's how I traded it. That's how I'm managing it. I made this video because people keep asking me to make videos about how I'm managing butterflies. The moral of the story is I'm just going to go ahead and take this one off because it was an overnight earnings trade and I'm going to take profits on it. So hope you find that helpful. The other thing that you can do is you can just scale out. You can close, half of it. You can close one contract and let the other one ride to see if this will hang out around 185 today. And then try to squeeze a little bit more out of this one. So, hope you found it helpful. If you would like some more analysis, you can follow me on Twitter. That's going to be at Trader Danielle. So, you can join me right here, Trader Danielle on Twitter. Hope you have a great rest of your day, and I'll see you in the next one.